Background of Bank Negara Malaysia started operations on 26 January 1959 as Bank Negara Malaysia, governed by the Central Bank of Malaysia Act 2009. This act provides establishment, administration, and powers of the bank. It is also gives the right to Bank Negara Malaysia to issue currency, act as banker and advisor to Government of Malaysia, regulate country's financial institution, credit system, and monetary policy. History of Bank Negara Malaysia. In 18th century, Malaysia became the subject of the British Empire. Board of Commissioners of Currency. 1837, Indian rupee was the sole currency of the Straits Settlement. It was used as penal settlement for Indian civilian and military prisoners. Botany Base of India. Malacca, Dinding, Penang, also known as Prince of Wales Island and Singapore. 1867, silver dollars were again legal tenders. 1903, straight dollars, pegged at 2 shillings and 4 pence, introduced by the Board of Commissioners of Currency. Private banks were prevented from issuing notes. Since then, the continuity of the currency has been broken twice, which is Japanese occupation 1942 to 1945 and by devaluation of pound, peg, where a currency's value is fixed against either the value of another single currency, shillings and pence, old British money. 12 June 1967, the Malaysian dollar issued by the new central bank, Bank Negara Malaysia, replaced the Malaya and British Borneo at par. 1985, the US dollar fell sharply, causing major losses in Bank Negara's dollar reserve. Jafar Hussain, the Bank Negara governor at the time, referred to this strategy as honest to God trading. Late 1980s, Bank Negara, under Governor Jafar Hussain, was a major player in the forex market. Its activities caught the attention of many. Initially, Asian markets came to realize the influence Bank Negara had on the direction of forex market. 21 September 1990, Bank Negara Malaysia sold between 500 million and 1 million worth of pound sterling in a short period, driving the pound down 4 cents on the dollar. 2 years later, on Black Wednesday, Bank Negara attempted to defend the value of the British pound against attempts by George Soros and others to devalue the pound sterling. Monetary policies of Bank Negara Malaysia. The Monetary Policy Committee of Bank Negara Malaysia decided to maintain the overnight policy rate at 3%. Function of interest rate in monetary policy. Interest rates act as important role in monetary policy because it has informational indicators. For example, current expectation of future inflation may help determine the performance of the economy in the coming years. The central banks are interested in getting current expectation information from forward-looking financial markets to help predict the future of inflation and output. Relationship between interest rate with the strength of currency. In this condition, inflation and unemployment rate being equal, higher interest rate increase the value of a given country's currency. The higher interest rate that can be earned tend to attract foreign investment, increasing the demand for and value of the home country's currency. Lower interest rates tend to be unattractive for foreign investment and decrease the currency's relative value. The country that has a fixed exchange rate system, if the value of a country's currency relative to other currencies changes only when policy makers bring about the change. Contrary, in a country with a floating exchange rate, the value of the currency changes in response to market conditions. Not only this, the value of currency increases if there is an increased demand for it and decreases if demand has fallen. Relationship between interest rate with the general price level or inflation. Interest rate directly affect lending and borrowing because higher interest rate make servicing loan more costly. However, higher interest rate make people cautious and encourage them to save more and borrow less. The demand is less than the supply, the hike in prices stabilize, and sometimes prices even come down. Impact of interest rate towards Malaysia economy's performance. Bank Negara Malaysia maintained overnight policy rate at 3%. If the Monetary Policy Committee of Bank Negara Malaysia reduced the overnight policy rate, it means that the presence of plenty of money in the system. The lower the interest rate, the more willing people are to borrow money to make big purchases, such as houses or cars. Businesses also benefit from lower interest rate as it encourages them to make large equipment purchases due to the low cost of borrowing. Consumers have few other places for their money to earn high returns on investment, so their extra money goes into paying down their credit card. It will increase the cost of borrowing with higher interest rate. Interest payment on credit cards and loans are more expensive. Higher interest rate increase the cost of government interest payment. This could lead to higher taxes in the future.